Everyone, hope you're having a good day. My name's Andy. The channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions. It's generally related to three different topics: wealth building, commodities, and/or financial topics. We're going to dive right in. We're going to take a look, see what people are sharing. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, I go deeper into all of these sectors and topics looking for potential investment opportunities. And there's a ton of value there. You can learn how to invest. You can learn to see what I'm doing. There's a three-pillar approach. Those pillars are ratio investing to see what's cheap and how things and asset classes are moving against each other. We've got technical analysis, and you'll definitely learn a bunch of technical analysis. And then we have market conditions, which is longer term cycles that impact the market conditions that we are trading under. So there's a lot to learn there. We do have a discount coupon code, Mayday, MAYDAY, one word, if you'd like to join. And there's a discount associated with that coupon code. So coming down, we've got breaking. Costco has added platinum maples to their precious metal offerings with roughly $100 premium. Maybe they got some technical traders over at Costco, and these guys are going to light it up in their earnings if they start to sell things that are undervalued and then go to an overvalued state. Right now, platinum is one of the best investments out there. That's one of the cheapest ones on a ratio perspective, and Costco is definitely jumping in on this. They're also playing the gold trade, the gold trade. So gold and platinum, they're gonna, they're releasing the maples with $100 premium. Look at them. Look at them go. We got Josh here. The gold to oil ratio is at an extreme level, indicating undervaluation of oil. Of course it is. Now, what I see here, this is how I view charts. A lot of people say, what are all these squiggly lines? No, 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 no. Draw a trend line above this, drawing a trend line across that, right? So we've got these market conditions. This is where gold underperformed oil in this squeeze down into the corner here of 2000 to 2009. What I think is going to occur here is we've broken that trend line to the upside. We have shoulder, head, and then another shoulder. And then your neckline is this guy going across. We have a regular head and shoulder pattern. We're putting in the right-hand side of the shoulder here. Now, if I'm right, what does that mean? It means that crude oil is going to go ballistic. It means that we are at a potential opportunity for investment right at this exact moment in oil equities and energy service companies. And the charts, guys, some of them look good, some of them look kind of like they haven't bottomed yet. We're getting closer and closer to this time, and we very well could do a little, a move higher before going lower. When this compresses, what that means is that crude oil is going to outpace gold. And gold has been just ripping to the upside here. So if we were to go back to these historical levels where it became overvalued, and that might take some time, I'm not saying it's going to be tomorrow. That's a 1 to 10 ratio. If gold's at $3,000 or $4,000, you divide it by 10, well, there's your $300 or $400 per barrel oil. And some people think that's preposterous. What I am going to say is the companies that I am in, if we get a $300 or $400 per barrel oil price, it will be insane. It will be insane because I'm choosing the particular companies that are going to give me the leverage when this goes back down that will give me a big kick in the pants returns. So I've got a lot going on there where we could get a big return here coming to the downside. Big, big. North Star, one by one, stock markets are rolling over versus gold as capital rotation takes hold. This is Russell versus gold. The early warning sign here, the breakout, we squeezed up and then a big move lower. This here is when commodities outperform. Commodities outperform when gold outperforms. Gold is our leader. And what do we have on the right-hand side here? We have a breakdown. We have a breakdown where gold is starting to outperform the Russell. What does that mean? It means that commodity bull market's coming. We're already in it. and people just don't know it yet. They don't know it because what they view, they don't look at these charts. They don't look at these charts and say, "Oh my God, we're breaking a trend line." No one thinks like that. They're all living their life, going around, probably drinking a bunch of alcohol on the weekend. I know how you guys party. Not you guys, but just in general. I know people party. And here it is breaking out, and no one's seeing it. That's your ninja buy. Your ninja buy is when no one's looking, and that the charts are signaling that things are changing, that the tectonic plates underneath us are shifting. And if you could get in early, aka the early warning sign, that is where you can gain big, big, big moves in your investments. You're playing these capital rotation movements. Tavi says the month is almost over, and silver miners could be setting up for one of the clearest breakouts I've seen in quite some time. The SIL ETF is still 55% below its 2011 peak, making this, in my opinion, one of the most compelling macro opportunities in the years ahead. And we are breaking out for the silver miners on its downtrend. We're seeing this a lot in the individual companies too. And there are some developers that are going to rip, I mean, rip this bull market. Now, are they in the most opportune time to be purchasing this second? Some are and some aren't. I know some people are going to sign up and say, well, I want to buy this, whatever. And most retail investors want to chase, something that's gone up multiple hundreds of percents. Yes, it can still go way up. Yes, we are still early. Yes, we just broken downtrends, but we could see some volatility here. Usually when you get a breakout, you get a retest of that breakout. Be patient, guys. And sometimes the retest can even come back down a little bit. So don't expect, when you invest, what I would say is need to have patience with it. You can't just expect immediate, huge returns to get rich quick. I understand people want that, but you have to gear yourself up to run a marathon, not a 100-meter sprint. It's a different mindset. The Kobayashi letter says U.S. existing home sales dropped 3% to 4 million in September, near the lowest level on record. Last month, closed sales of existing homes were only above the onset of the 2020 pandemic. Contract closings are now 30% below pre-pandemic levels. Furthermore, sales of both existing and new homes fell 1.6% to their lowest level. I think interest rates have a lot to do with it. And it fell off a cliff in 2021 when interest rates were getting rammed higher. Then you could see it fall off a cliff. Now, I don't think this is going to respond immediately when rates fall. I think there needs to be a period where rates kind of get realized into the mortgage, rates, and then people kind of feel comfortable buying again. So I think this is going to be down for a little bit, and we'll see what rates do here. If rates fall, I think these sales will go back up so long that the rates fall for a period of time. If they just spike down, they may not impact this number all that much. Coming down, Tracy says, via Apollo, looking at the historical relationship between the S&P 500 forward PE ratio and the subsequent 3-year returns in the benchmark index shows that the current forward price to earnings ratio at almost 22 implies a 3% annualized return over the coming 3 years. See the chart below. In other words, when stocks are overvalued like they are today, investors should expect lower future returns. And this is just a dot plot. Then they threw a linear R squared value on this. So this data is correlated with this line here going down, a 21% confidence level. That's the S&P 500. This is the forward PE ratio, and you can see the returns. As your valuation goes up, your returns go down. And we're at a very high level right now. Shot me back down. Okay, there we go. Coming back down, Palladium. Palladium futures with its first stage 2 continuation breakout since moving into stage 2A in September. Stage analysis technical attributes SATA score has improved to an SATA 9 of 10, and the Mansfield RS has crossed the 0 line. So there's the stage 2 continuation breakout for Palladium. Downtrend line break, we based out. Got the big green candlesticks that first showed up in late 2023. Small selling pressure down. The consolidation base, we're starting to break out of that. This is going to be good for, platinum group metal miners and stuff like that. The Nasdaq update, we've got that rising wedge that could potentially break to the downside. We came in, we entered this rising wedge from the top side down, squeezed on up. This looks good to go lower. Looks good to go lower. Silver looks set to retest the breakout after surging from an inverted head and shoulders pattern. The target zone of 35 wall was hit. This correction is a healthy sign of a bull market. The overall outlook remains bullish, and any correction should be considered a buying opportunity. And you can see the shoulder, head, shoulder, and the potential move lower. Now, the one thing I'm going to say here is silver moves fast in both directions. And trying to play the short term, I think, is an incorrect move. Yes, we could pull back, and yes, we could do a retest of 3250. Totally possible. It doesn't have to do that. Doesn't have to do that. So I would be very careful to lose my position in a bull market. That comes straight from Jesse Livermore's book, where the old man Turkey says, you know what? I don't want to sell it. And they said, well, you should buy it back on the retest. This is the exact thing that they talk about. You should buy it when that's a few points lower. And he says, you know what? In his experience, things can move quickly, and he doesn't want to lose his position in a bull market. This is the exact scenario that he talks about. It's this right here. And that's why I don't try to trade the short term anymore. Done. Bitcoin versus gold, simply waiting for the objective evidence at this point with a completely open mind. We've got a bullish breakout upward, or do we get a bearish breakdown to the downside for Bitcoin? And that's what he is looking at to see which direction. Now, here's the thing, and I don't know which way this is going to go here, guys. I don't know. Bitcoin has a lot, there's a strong correlation between Bitcoin and the Nasdaq. The Nasdaq looks like it wants to go lower. So if this is going to go lower and there's that, and the correlation holds, we're going to break downward. If the correlation isn't there and Bitcoin is its own entity, own sector, it could break up. The problem is we don't have any data. Since 2011, this has been one big Nasdaq bull market. It's in a recovery phase of real estate, and we don't know how this is going to behave. Don't know. So we're going to find out. We're going to find out here soon. Markets and mayhem. Lower liquidity often leads to higher volatility. We're seeing liquidity in treasury markets fall rather dramatically over the last several years. It indicates that we may see rate volatility rise appreciably from here, which could provoke a rise in other volatility like FX, which is your currency exchange rates. So liquidity is dropping. It's getting tighter. The worst liquidity is higher on this. We have worse liquidity here, and it's going to increase volatility. We could see that in the form, in not just in interest rates, but also your foreign currency exchange rates. HFI research says, seriously, can we just get over this? My advice is to buy quality energy names and wait. I agree with that, though. This is completely right. He's right on top of it. I agree with that wholeheartedly. Okay, so this is uranium. This is the wife-changing gains. So wife-changing money, uranium Corgi says, me, you should really stop buying uranium stocks. And here's my wife. Me, Chill and his wife is kicked out of the car. Wife-changing gains is what he is looking at here. Up all night on physical, down all day on paper. What's going on here? COMEX is open. China and London driving on up, and then COMEX opens, and we see a move, selling pressure lower. But I do think that impact is becoming less and less over time. I think the COMEX is getting overrun. And I think China, London, and the BRICS, and even Russia, they're talking about setting up strategic metals. Strategic metals like silver, platinum, palladium. And their countries are going to actually buy those metals and hold them in strategic reserves. I wonder how that's going to play out when they buy less of treasury bonds, the United States treasury bonds, and they buy more of gold, silver, platinum, and palladium. They're going to squeeze the crap out of the COMEX. Now, here's another thing to think about, guys, that maybe you are not thinking about. Who's short all this stuff? And what are they short? The big banks are short. JP Morgan, Bank of America, all of these banks are short platinum, palladium, gold, silver. They're short that. So what happens if they're buying all that and they're going to squeeze the physical? Could we see the paper markets go up dramatically? We could. And what is that going to do to the banks? What is that going to do to the dollar if the banks need a big fat bailout? I don't know what's going to happen, but I think it's pretty interesting. They could get a big squeeze on the banks here if this continues to go up like it is. Egon says the federal debt has surged from 426 billion in 1971 to nearly 36 trillion today, an 82-fold increase, while GDP has only grown 26 times. This widening gap between debt and GDP means that ever increasing amounts of debt are needed to fuel artificial growth. You know what that also means? It means that it's inflation. You can't have an 82-fold increase in debt and not have an accompanying GDP with it without inflation. So that is inflation that he's just mentioned there. Christine says productivity per foot is declining, even though we are likely activating the last of the top tier acreage given weak prices. Well done, shale bros, burning your margins through overproduction and destroying your value. So this is the normalized productivity is deteriorating modestly in oil plays. U.S. oil plays normalized first-year IP rates by play, median and interquartile range. So we are declining in productivity per foot. It means that we don't have as good of acreage. It's less quality. And it's going to get harder and harder to increase production as your productivity declines. That makes sense. Coming down, we got Palladium here. It's go time on Palladium, says Casper. So go, go, go. Latest comparative inventory analysis with EIA data through 1023. The WTI fair value of $84 per barrel. It is $13 undervalued based on current WTI price of $71. There's your dot plot and how cheap we are. Look at these areas. Those are probably other presidential elections, aren't they? I think this will go back towards, if it goes to overvalued, if you go straight up, overvalued would be $90, 90 something bucks. Precious metals suggest an oil shock is likely. Huge implications for stagflation, energy, and all those other things. So all up, all down, all up, all down, and all up. That's great. And he's showing the market conditions, and oil's just lagging behind it. And oil's going to be the best one here. It's going to rip. And remember, we looked at the gold to oil ratio. That's why oil is so cheap. It's lagging behind it. Gold and silver lead. Oil will follow behind it on a lot of these cases, unless gold's way overvalued. When silver breaks away from its blue big picture breakout and backtest versus the SPX, the big move in silver starts. Lifetime opportunity not to be missed. Silver versus SPX, and we're getting the breakout here. Here we go, guys. Here we go. I'm loaded in this stuff, guys. I am so prepared for this. So prepared. Platinum is now seriously thinking about going for a mega breakout. Russia, China, and Iran are now stacking silver and platinum. That's that strategic metals stockpile. Russia's looking at banning exports of palladium and platinum. Just like silver was, platinum is now sitting right below a historical, huge blue breakout line. It has been in a cyclical bear market for 15 years and is about to break out and resume its secular bull market. A generational breakout and opportunity is incoming, also for platinum. It has now been basing out for about 10 years, just like back before the start of the secular bull market in the 1990s. The coming blue breakout will confirm the resumption of the secular bull market for also platinum. And the coming blue breakout will also confirm that wave 3 has started, which is the strongest and most profitable phase. Platinum has a very, very long way to go. What the exact final target price will be is not important right now, really. What is really important is to get ready and to get real guidance along the way. Even before I called the commodities bear market low back in 2020 in real time, I said platinum will outperform gold and silver in the coming bull market. Pioneering with platinum case on FinTwit. As I said 4.5 years ago now, do make use of what will be the greatest commodities bull market ever seen. It will absolutely be your greatest market opportunity in life. Here's platinum ready to break out at any second on the monthly chart. The false breakdown in 2020. You know who bought this right here? This guy did, me. And I've been buying ever since in these low areas, accumulating for this big breakout. I am pretty well balanced in my portfolio between platinum and silver, and I do have some gold as well. I think platinum and silver are going to do ridiculous things. And I also have the equities to play this bull market. I am so ready for this. God, I'm ready. Well, I'm not going to go over this one. That one's kind of confusing. And that's what I've got for today, guys. And we're going to end it there. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Mayday coupon code is active. MAYDAY. 50% off the first month, and only the first month. But then you get a bigger discount if you guys like being a part of the membership. If you like the entry points, you can go to the yearly membership, sign up using that Mayday coupon code. Go in, sign up, save yourself some money. You save $100 per year using that code on the yearly membership. Got to use the code to get that discount, MAYDAY. It will also save you in future signups. So you've got a double whammy there. That's if you're interested. And that's what I've got for today. So we're going to end it there. We've got a question and answer session coming up 7 a.m. Mountain Time on Saturday. See you guys there. Catch you later.